Hey traders, Nick here looking at Netflix. It had a bad day. Actually, it had a string of bad days. And we've been on the short side since the top, exactly at the top. Not blowing smoke. You can check on Twitter. I even warned last week when it was up and probably $40 above what it was now. I said on several occasions, be careful. Some things, it needs to hold certain lines, otherwise more pain ahead. So I just want to try to walk you through the logic. First of all, we tracked this with the group, especially in the chat room, to which we have a link down below in the description. It is, give it a try. It's free to try out. So the idea is to be emotionless, especially with a stock like Netflix. So there are a lot of fans. They have delivered on promises with growth and all of that, but they had a few flubs before, but they recovered from them, and it's cheap enough to where I don't think a recession is going to affect their pocketbook that much. I recently started watching Netflix. I haven't before, and they have good content, although some of the dubbing is weird. Like if you like foreign films that are concept and they like 3%, for example. I enjoyed the concept. I went to watch it. Good acting, but the dubbing is like, it's like a B movie almost. Anyway, but if I had it, I wouldn't cancel it because of that. So it was a good thing to watch. So back to the stock itself. It has nothing to do with how I feel about the company. I don't like the fundamentals. I don't like it for the long term. But for now, I don't want to short it based on that. I did short it via a debit put spread. It's not like I went out and sold the stock short because that would bring unlimited losses. So I used the options market and I said I want to buy a $10 wide debit put spread for, I think it was $2.50 at the time. So the upside is $7.50 if I was correct. And the short actually works on the weekly chart. And the intent was to start with a short-term trigger for it to start on a good note, and then I can peel off however much I want and leave the short on through, say, September. Luckily, it just paid really quickly, enough for me to do that. And because of my personal book, I adjusted my trade accordingly. So how could we have seen it coming? So nothing is that obvious. It's not going to tell you today you have to short it. First of all, you have to draw a lot of lines. Keep track of all the lines that do matter. And in this case, I do track it a lot. Each set of lines are for a certain time frame, and that's important. First, define your time frame. This is a daily chart. It's never enough for me. So I usually have to drill down. And then you start seeing levels that matter. Okay, there was an overnight poke down up to the 50s, almost to 60. And then when it fell back down, there were certain levels that it needed to hold. And I believe there are some that I can show you here, kind of like the progression of how it happened. So this is actual chat from the chat room, me talking at different times. So this is May 14th. I was tracking it on the way up. So I knew the levels on the way up that were resistance. And then I said that I was short on the 18th, which is the exact top, level-wise, one day before the exact top when it started falling, I think. And then I said based on technicals, it was no emotions. And then a little head and shoulders, and then the stock is still short, nothing has changed, and then an overnight poke that kind of failed, and then the bearish trigger really started when 444 was lost, which was right there. So once it fell from here, I knew that the trapdoor had opened on a shorter time frame. Again, you have to track it shorter time frames. And then this looks, where are we at? Right there, 444. And then one thing led to another. This neckline leads to this neckline, and now it looks like a head and shoulders. It has to hold or it falls. And there was a consistent selling in it on Tuesday when the markets were rallying 2 and 3%. So that's a little concerning. So if I'm long and I didn't get out from here, this is not where I start getting out because this is a prior neckline. So they're going to fight for it a little bit before they lose it, if they lose it. So a bounce could come here, but it's up to personal individual taste on how much pain can you see. So this is still a popular stock. So it will need the market's help. And by that I mean if the markets correct anytime soon, then Netflix might see some more pain. On a weekly basis, I still see the same short down to, I hesitate to say it, I'm going to say it nicely, at least at 390 or lower. even at 375. I know now you're starting to cuss and flip me off or whatever, but if you think about it, this was the neckline that made the difference right here, whenever that was, April 9th. So this was the base for a 20% rally. Going back and testing the neckline is normal. Now I contend that this is, like I said, this should be support zone. But these candles came so fast that I don't know how much conviction there is in them, but I wouldn't start shorting it here. If you heard my 390 and 375 and you started cussing, either you love me or you hate me for saying it. If you love me, then you start shorting, and that's a mistake too. Because if I'm short, I'm okay staying short to see what develops, because onus is on the bulls to, not fade the pops. But to start short right here is, the easy work is done. So it fell, what is that, 10% eyeball? Yeah, about 10%. So I'm making both arguments. First of all, it's an unemotional trade that happened. Second of all, I'm merely sharing how it develops. So if I track a stock, I know what happened on the way up. I knew that this was a big neckline on the way up, and once they took it out, I knew the upside was big, and get out of the way. And then when it held this line, I knew it was important to hold it. They ended up filling it almost to the penny. I didn't notice that. So at this time, I said they should hold this line, otherwise this can come, which would have been normal. Yeah, so it did come, and it was normal because it was the base of another rally this much. So you break out, you come back, you test for footing, you break out, and if you test it again, that's fine. But this one is testing it at a higher level. So bulls are not out of the game. They need to, they can still save this from catching steam. Now I heard on CNBC After Hours on Tuesday that somebody there, I think it was Tim, he was bearish Netflix and making the points against it for some fundamental reason. And then they tells you that he didn't short it yesterday. So he's still red on his trade. He shorted it like a month ago. So in my case, I shorted it here, so I'm okay getting out here, and I'm not offending anybody. It was just a matter of trading it. So harmonics can come into play, and if you're good with that, you can see some levels that would point to one way or another, depends on the time frame. But some homework needs to be done, and stop chasing the headlines in the news, because if CNBC says it, it's ubiquitous. A lot of people know it. So chances are we're getting on the bandwagon, whatever that is, too late. We become sheeple, not people. Then do some homework, and if you don't know, join a group. There are a lot of good trading groups. I happen to have a really good one. I'm biased, but you can judge for yourself. So anyway, Nick signing out on that one.